Hello and welcome to another episode of Monday Macro View. This is Osama Rizvi coming to you from Primary Vision Network. There are a lot of things that I want to discuss with you, but due to the scarcity of time, I'll just focus on two important things. First of all, what happened with OPEC Plus and the surprise cuts, and secondly, there are lots of reports of the premature death of the dollar, and I must say they are quite exaggerated. So I just want to, really mention or reinforce how important the dollar is to the global international financial system and the global economy, and why whatever analysts and observers are saying, that might not be too correct, or whatever they want, it lays somewhere around decades and decades ahead. So, first of all, starting with the Fed, with OPEC Plus. So the way things are being portrayed right now, I'll just give you a little bit context. So you can see on the slide I've written Fed versus OPEC Plus. Why? So the context is that from previous few years, the Washington and Riyadh, they have not been really close. They have been cooperating, of course, on different international and diplomatic fronts, but there are cracks appearing in the relation between both these countries, and especially after Biden and the whole Khashoggi saga, and this the cracks, this growing growing apart episode, this highlights, or this appears in its most pronounced manner when it comes to the oil markets and its mechanisms. So the cuts right now, they are at a very strange time. Many believe that one of the reasons that OPEC Plus went for the cuts was that US said that it won't be buying back all of the released oil barrels from the SPR. But there were other reasons as well. If you look at OPEC countries, their imports in dollar terms are very high. So naturally, and I wrote this as well, they have learned their lesson from 2014, from post COVID-19, and they want to really keep the oil prices at a level where they don't face any budgetary issues. Secondly, why are these cuts being considered so controversial? Because the cuts right away undermine or can affect in an adverse manner the current efforts by global central banks to curtail inflation. Also, for developing countries, developed part of the world, which I and Mark and we have been covering a lot in our shows and articles, they, with a stronger dollar, with the rising mountains of debt, they will face they will have to face the music for this. India, Pakistan, other countries, Japan, South Korea, not developing, but still they depend upon oil imports a lot. And then, of course, there is this Russia-Ukrainian dimension. As oil prices have fallen, there is a price cap in place, but a rise in oil prices might indirectly help Russia in their finances as well, undermining, therefore, the effect of sanctions. On this chart, you can see a very, very beautiful snapshot of the recent cuts, 1.16 million barrels. But of course, there is another question. We will see whether all of these cuts have materialized or not, because last time we also saw that only a few 100,000 barrels made it to the actual figure in terms of cuts. However, the main point that I'm trying to highlight is that the case for oil is still bearish. Markets have sort of misinterpreted this news, and I've written an article by the same title on oil price. Feel free to check it out. Why? Because look at this chart from Vortex. It shows that the total seaborne oil loadings were exceptionally high, quote unquote. I mean, for the first time since April 2020, the global crude and condensate loadings, they were almost about 50 million barrels per day, which was around 400,000 barrels per day up from February. So this shows that there isn't any supply constraint. If you look at the other slide, even in terms of Russian diesel export, and I was speaking about this on a shirk with Bloomberg as well, and it turns out that Europe about 60% of, there is about 60% or 50% vacuum in Europe right now, as they have stopped taking diesel from Russia, but it is still going to Europe through other routes. I've kept saying that whatever is happening in the oil markets in terms of sanctions and bans, it is only a reorientation of the flows, not a disruption to the flows. So diesel exports, in fact, surged in March on month-on-month basis, 33%. And exports from Black Sea alone, they went up 270,000 barrels per day, month-on-month, which was a historic high since 2016. So, the diesel exports are going good. The overall loadings are better. And the recessionary factors are piling up, as we will see in the last slide. So if you're a little looking ahead, you would say, okay, the market, the demand for my product might not be as strong. Let's curtail. Let's just manage the supply in order to manage the prices. So that was in effect a bearish development. Another thing, there was a news by recently in Bloomberg that China and Malaysia, they're trying to restart talks on develop an Asian monetary fund to replace or to reduce their dependence on dollar, which seems like a good idea. Whatever is BRICS have announced their own currency. I think the right way to put it, or how I will put it, in my humble opinion, is that, of course, nothing stays at the top, but whenever the book about the decline of dollar will be written, 2020 and after the years after those would be very pivotal, would be the time when this decades-long or a century-long process was initiated. But to say that this will happen in a few years or something, I don't know, maybe, but not. Look at this slide. So the reports of my death are greatly exaggerated, usually attributed to Mark Twain, but I think that it also suits very well to US dollar. Look at the proportion, 61% or 60% of the global reserves are still held in dollars. Look at this. China's currency, on the other hand, only corresponds to 2.19% of global payments, whereas dollar, 40%. You can read the other stats as well. It's a difference of, it's way more than what any other currency can accomplish at the moment. So dollar is staying, whether you like it or not. Finally, the market sentiment tracker. I think the trouble in the real economy, you can see weaker than expected purchasing manager survey for manufacturing. Similarly for services, inventories in the US are growing. Export orders have fallen. In fact, one of the indicators slumped 18 points, the largest on record. Larry Summers is still bearish on global economy. Job market is cooling a little bit, and China's PMI also fell. So on the other hand, there are some positive developments, but overall, things don't look really good. I still believe the chances of recession are still there. We're getting closer to it. So that's all from my side. I'll see you all next week. Thank you so much for watching.